Through perseverance, many people win success out of what seemed destined to be certain failure. Benjamin Disraeli. My friends, we see pretty much everything down for the day. Bitcoin up just a little bit, 0.27%. Let's jump first into the S&P 500. We're going to always start with what? The weekly chart. And what do we see for the week? We see a smaller candle moving up a little higher, touching higher during the week, but overall price percent oscillator pulling away from the red signal line. Derivative oscillator remaining negative, losing a little bit of downward momentum, but didn't have a crossover. Haven't had a crossover. Divergence is still in effect. Look at the first day of this latest 2-day candle, pushing through the 2-day trend line, trying to head down. If we get to the close on Monday and we have a 2-day crossover going down, what is it exactly? It would be a 2-day recross, which would give you an opportunity to potentially short the S&P. It's what we call a 2-day recross, the 2-day moving back in the down direction of the weekly. Now, we'll wait and we'll see. If you want to practice trade that on Monday, you got to make sure that it actually occurs. So pay close attention to what happens as you get later in the day. The buy-in point is, of course, sometime right there toward the close around 345, 350. Go ahead and get set up. Now, you got a couple of choices. If you're a Patreon member and have taken our training on Options Made Simple, the Charting Wealth Way, then you'll know how to get into a put trade, a put practice trade. Remember, not a stock calling service. We're an education firm. Also, you can look at something like SH. What is that? That is a short fund of the S&P 500. When the S&P 500 goes down, this goes up. S&P goes down 1 point. This is set up to go up 1 point. Yeah, opposite percentages. That is the way it is set up. It's called an inverse fund. There are good things and bad things about inverse funds. How are you going to learn about them? You're going to learn by practice trading them. If this sets itself up and you would spend real money on a trade, then of course do a practice trade. You might buy a put. You might buy some shares in SH just to see how it works in your practice trading account. Now, that is where we are on the 2-day. What about the half day? We can see that things slid sideways a little in the morning and then dropping off, punching through the 2-day trend line in the afternoon. So that is where we are on the S&P. Let's move from the S&P to the Nasdaq 100. Warned you about the Nasdaq 100 slowing down some yesterday. Being careful. You know, if you jumped into this trade when we had the weekly vertical crossover going up back on the 2nd of July, again, had a good week last week, had an okay week this week with a higher high, but look at that price percent oscillator high. It flattened out at the end of the week. Derivative oscillator still going up. Look at the 2-day. We had 2 warning candles. We had one representing last Thursday and Friday, one representing this Wednesday and Thursday, and then Friday pushing through the 2-day trend line. Price percent oscillator hasn't crossed over yet, but it is going down. Derivative oscillator has been losing momentum now for many days. It actually peaked back at the time of the weekly vertical crossover. So that's where we are on the 2-day, half day again, down on Thursday, sideways Friday morning, and off the chart, down on Friday afternoon. So that's where we are. If you're in that Q's trade, just be careful, pay attention. That is where we are on stocks. Let's go to bonds. Bonds down 0.19%. They continue to trundle up. Look at but what happened last week as compared to this week? We hit a higher high. We did not make that over the course of the week. A much smaller candle. Price percent oscillator still going up. Derivative oscillators going up. 2-day, again, looking better. It was heading down, and it's still trying to move up, going on to 3 days. This is the first day of the latest 2-day candle. Derivative oscillator still losing momentum. That's our leading indicator, but that lagging indicator, price percent oscillator, still trying to move up. Haven't hit that high that we hit back on Friday the 9th. That represented Thursday and Friday, the 8th and 9th. Look at the half-day chart. You can again see where things peaked on Thursday morning and then rolled over and is trying to build itself back up. We did see that in the morning, crossed over, it looks like on that half day going up as far as the price percent oscillator goes, derivative oscillator 2. So again, it's the little engine that could. 20-year bonds just keep trying to move up. God bless them. That's where we are with them. Now let's go to gold. Gold, a little disappointing. We were hoping for a weekly vertical crossover. Didn't happen. Price percent oscillator flat after going down for the day, almost 1%. Gold down 0.96%. Still have a green spinning top open box for the week. Long wick on the top that shows you how much it could have but didn't do. And again, derivative oscillator gaining downward momentum. We warned you about that derivative oscillator yesterday not being set for gold to really cross over strongly and move up. What do we want to see? We want to see something like we saw when gold took off last time. That was back on the 23rd of April, the week ending then. We had the derivative oscillator and the price percent oscillator both crossing at the same time. And what happened? Jumping in point somewhere around the 166 mark to a high of what, 178, 179? Beautiful. Not happening yet. I can't wait for gold to take off, but it's not happening today. We will keep our eye on gold and see if we have a 2-day crossover going up at the close of the market on Monday. That might happen. That would be nice. That would set us up for maybe a building of momentum in that weekly crossing. And we see the derivative oscillators already switched over. How about the half-day chart? Well, we can see where gold was building up through Wednesday and Thursday, and then Friday just moving on down. Didn't cross over yet going down, though. That's where we are on our 4 big charts. Lastly, go back to the weekly, check out Bitcoin. Up for the day, 0.27%, but overall, Bitcoin still moving down. Derivative oscillator negative, losing some downward momentum, but that price percent oscillator and those candles still red, my friends. What's up with the half day? Well, I'm sorry, 2-day. I mean, again, laying down a red candle. We do see that the price percent oscillator is pretty much laminated a little bit above. It looks like that red signal line, but maybe Bitcoin's going to find its bottom. What, somewhere around the $31,000, $32,000 mark? Or is it just going to keep moving down? Don't know. We'll let the charts tell us. Half day, again, we can see where, I mean, it's not to the lowest low that we hit around that $30,000 mark. But again, maybe that'll be the bottom. Who knows? Who knows? We're not going to worry about calling the bottom. We're going to wait till things cross over, led typically by the 2-day and then the weekly. And then you can try to repattern what we saw happen back in October of last year at about that $12,000 mark up to, let's see, where would we have gone? Somewhere around the $59,000 mark? That's not bad. Maybe we can see that happen again. But you're not going to be doing it if you're not following this market every day and being willing to practice, trade it, and learn it. That's where we are, folks, as we end the day. Thank you so much for all of our Patreon supporters, our book buyers. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.